What's up, everybody? Welcome to the Tribe of Millionaires podcast from GoBundance. My name's Jamie Gruber. I'm your host. And today we actually launch a second series on our podcast platform for non-member guests that are significant, that have done amazing things in life, that have truly grabbed life big. And today we're starting with a guy that I've had in my network that just is an incredible person with an amazing story that I felt needed to be shared. So I brought him on. His name is Albert Berriz. He is the CEO and founder of a company called McKinley with over $4 billion in multifamily assets owned, not under management. A significant company, mostly owning properties in the Southeast and the Midwest. But Albert has an immigrant story. He is a Cuban refugee. When he was very young, he and his father and his whole family came over from Cuba right after Castro took over. And he gets deep into how difficult that move was and what he went through, what his family went through, and how he literally escaped. Incredible details. I can't wait till you hear that. But he also talks a bit about the new level of entrepreneur, the new wave of entrepreneur, especially in the multifamily investing business. He invests in workforce housing, Class C type apartment buildings, and he sees such an opportunity for investors today, given the influx of social media and other ways for you to raise capital and build brands that just wasn't present for him when he was coming up years and years ago. We also talk about the multiple crises he's faced in the markets and where he sees things going from here on out. A ton of information with an incredible person. If you love this episode, make sure you subscribe, like, drop a comment. Let us know what you think about Albert Berriz, about this episode, about our new theme here. We've got non-member prominent guests that we're bringing on every Tuesday for all of you, and I hope you get a ton of joy out of that. But until then, dive in and listen to Albert Berriz. Albert, welcome. Thank you for being here.
Jimmy, thanks very much for having me. I'm very excited to spend time with you. I've been very much looking forward to this.
Same. Trust me. I posted on Facebook. Well, you saw it. I posted on Facebook this morning about today being like Christmas for me, the fact that I get to interact with you. So I really appreciate you taking the time. You have a pretty interesting and I don't know, unique immigrant or even refugee story. Your father moved here, I believe, in his 40s. You were very young, from Cuba. I think it was to Miami. You talk about how he had a sort of restart. He had, some success in Cuba and had to come here, work hard, and restart. Can you just tell me a little bit about your dad? Just what you would define him as and what he's meant to you over the course of your career?
Oh my gosh, he's everything. He got us here and gave us a life that we otherwise wouldn't have had. I mean, had we stayed in Cuba, we probably would have been killed. For a variety of reasons. I won't bore you with my escape from Cuba story, but it was pretty dramatic, and the kind of things that he had to do to get his family here, I couldn't even imagine doing myself. And he did it. And a very successful man who had to start from scratch and doing whatever he had to do in this country as a refugee and an immigrant, and started from the ground up and really showed us what hard work was all about. And really, I learned about persistence. I learned about a lot of characteristics that, if I had to come over here and start over at age 43 after having a very successful life and business and family, I don't know if I could have done it. I mean, it's quite remarkable. So there's a lot of life lessons there that I'm very thankful for. And also very thankful for being in this country. This is without question the greatest country on the planet. And, having been a refugee and an immigrant and a family who started from scratch, we are forever thankful and appreciative. There is no place like it.
If you wouldn't mind indulging me when you say, don't want to bore me with your escape from Cuba, that there's intrigue there. Do you mind just giving a little bit of detail? Because I mean, that's not an experience most people have to not just immigrate, but escape. What was that like? What do you remember of that? I know you were very young.
Well, I mean, I can tell you the story because my father would tell me the story every single night for the first 20 years of my life. So I can almost repeat it. It takes about an hour. And I had a little interesting exercise. My brother, who's 15 years older than I am, and my sister, who's almost 8 years older than I am. My wife got us all together recently and said, well, each of you tell the escape from Cuba story. And it was amazing how identical the stories were. Now, my brother actually lived it because he was 18. And, my sister was a bit over 11, almost 12, and I was just over 3. So, I mean, my brother did live it. In fact, he lived it with my mom and dad. And very directly. So, his story is the most direct version. My story is a translation of what I've heard from my father over the years. But it was a very dramatic escape. We shouldn't have gotten out of there. There was a lot of reasons why the communist regime at the time wanted to execute my father, and I think they would have delighted in executing all of us. But he was masterful and creative, and got out of there 8 days after the revolution. It was December 31st, 1958 is when Castro took over Havana. And he got us out of there by January 8th, 1959, which is pretty heroic, and we're alive. So God bless him. He's up
Wow.
he's up in heaven, and I thank him every day for it.
He passed at the age of 93. How long ago was that?
It was a little over 12 years ago now.
12 years ago. Gotcha.
Yeah.
You mentioned work ethic. You learned that from him, obviously, and he established that in you, I'm guessing, at a very young age from the sound of it. What do you attribute that to? Is it just simply coming over and having observed your father? For you, I mean, your work ethic is very hard. Is it observing your father? Was there expectations from your father? What do you derive, or how do you I guess most relate to the work ethic you have now and how your father taught you that?
Well, I think the practical reality is we didn't have a choice. So, I mean, when you're faced with that reality, doing whatever you have to do to feed your family and survive and move your family forward is just reality. So, we grew up in 1959 Miami. It was a refugee community. It was an immigrant community, and none of us had anything. And so, it was understood. My father would actually get up at 2 a.m. because he worked for a friend of his who was in the car import export business. And so what my dad would do is he would drive up with a Volkswagen with a tow bar in front of it, and he would go pick up cars. And we were living in Miami at the time, in St. Pete, Florida, or in Clearwater, or in Tallahassee, or in Jacksonville, or any one of the various places there were auto auctions. And he would bring those cars back to the port of Miami, and then they'd be exported over to Puerto Rico, which is where my dad's friend's business was. So, I mean, he was getting up 5 and 6 days a week to pick up these cars, and he would get paid per car. Every car he brought back out of the auto auction to the port of Miami, he'd get paid a dollar amount. And so he would try to do as many cars as he could in a week. And so as I was growing up, he made it a point of sticking me in that car, and we drove up together, and we spent a lot of time talking. And so I saw what it was for him to get up at 2 a.m. when, again, at age 43, after having had a successful life, I don't know if I would have done it. Holy cow.
Yeah, that's tough. That's incredible. That really is amazing. And he retired late, correct? Or stopped working, if you will. Wasn't he later in life when he did that?
Yeah. He reluctantly retired at 88.
Wow. Reluctantly. Why reluctantly? I'm curious.
After he was a real estate developer, because he was able to accumulate enough money and go back to what he did for a living in Cuba. And he loved it. And so, he transferred his wealth out of real estate development and into the mortgage business. He provided people second mortgages, and he actually did a great job of just managing that business, and he had a lot of fun with it. And so he just didn't want to stop. And, he was just a very active guy mentally, and loved it. And so, his second wife, he remarried, urged him to stop because he was so late in life, and he did, and he agreed to it. But, I remember talking about age 90. He said, "Man, I wish I wouldn't have retired." So it's a guy who just loved working, and I think what he loved is he loved being challenged mentally, and so I think that challenge is what kept him alive for so long, quite frankly.
That makes sense. Is there anything that you can recall from your father's example, or maybe even words of things you learned of what not to do? Maybe that you took with you as you grew and built your own business.
Oh yeah, we have a series of classic things that he would say, and for a guy who lost everything at 43 and almost his life, he'll tell you there's 2 things that people can't take away from you, and those 2 things are your education and your willingness to work hard. Everything else today they can take away. And you say, well, that seems like a little radical, but you know what? It happened to him. They took it all away. And so the only thing he had to rebuild were 2 things: were his education and his willingness to work hard at 43. And so, holy cow, I mean, that's sound logic, So two things that I've always listened to, and I passed on to my kids is, education and willingness to work hard, because those are the 2 things that, no matter when you lose everything at any point in your life, with those two things, you can always rebuild. And so I think that to me is a life lesson that I'll never forget. It's emblazoned in my forehead.
Yeah, I've heard that you'll work maybe up to or consistently at the 80, 100 hours a week mark. Like your work ethic is legendary from what I understand. Is that true?
Well, I think it was true at 25 and 35 and 45 and 55 and 65. I may be winding down a little bit, but I mean, I certainly am working hard a lot. I like to work hard. I think unfortunately I inherited my father's characteristic. I don't know what it would be like to stop working. My wife would make sure that she'd kick me out of the house if I did nothing. So I think I'll continue to work.
So is that, I'm curious, would you work, I mean, if you were flipping burgers, would that work ethic be there? Or is there an element of, I don't know, passion or purpose in the work that you do that you think drives that, where it almost isn't work? It's kind of love of what you do.
I don't think what I do is work. I'm absolutely passionate about what I do. I mean, I am blessed. I have an amazing group of people I get to go to work with every single day. We're extraordinarily good at what we do. I kind of call it like Camelot. I mean, it's a very special, unique environment that we get to control because we have a lot of autonomy financially and otherwise. And so it's a blessing. It's a blessing. I mean, it is something that I am looking forward to getting up every single morning and starting to do every single day. And I also am passionate about providing people homes. And so I think, we're in the workforce housing business. We're not in the luxury housing business. Mm-hmm. And so what we do every single day is provide people homes. And these are folks that are going to have to get up tomorrow morning and go to work every single day. So, we're, and certainly coming out of the pandemic or working our way through the pandemic, those homes are no longer homes. I mean, they're homes, they're offices, they're schools. I mean, everybody's home turned into everything. It's not just a home anymore. It's every aspect of their life because they've been living every aspect of their life through the pandemic. And for me, providing people homes is an absolute thrill.
It's interesting, when you hear that many hours and you associate it to work, my mind goes to, man, what suffered? Like what in your life would have suffered as a result of that? But the flip of it is, you were very much aligned, or you have been very much aligned with what you feel is purposeful and fulfilling for you, right? So I guess the question is, does that amount of work or that amount of time committed to your passion, does it create sacrifice in any, or has it created sacrifice in any other areas of your life that you look back on now and say, man, had I not been so dedicated to what I do, this wouldn't have suffered? I'm just kind of curious.
Yeah, I think in my particular case, I have an amazing blessing, which is a wife who I've been married to for 40 years now and 43 years together. And so whatever I screwed up on, whatever I missed, which I think was a lot, she made up for times 10. And all the different things that I probably could have done at that time when I was growing up. Thank goodness we had her, because she's and she still is the cornerstone of our family. So Paula is a force that is monumental in my life. I mean, to have a woman like her with me together as my partner our entire lives together like this, because we were kids when we got together, and so it's a unique blessing. And holy cow, what a great woman! So I guess whatever I screwed up, she more than made up for. Let's put it that way.
There you go. I love honoring Paula. That's amazing. I appreciate you saying that. So speaking of relationships, like long term, as I researched you and really kind of figured out, okay, what direction would I want to take this interview? Long term came up a lot, like long term with your investment strategy, but long term into marriage with your wife Paula, but also long term with your partner, right? So your father is a mentor of yours. I know your partner, a little bit older than you, has been or is a mentor of yours as well. Can you talk a little bit about, though, what do you attribute your ability to sustain long-term relation? I mean, your two most important ones, or maybe even your three, your father. I mean, you were so close until the very end of his life. Your wife, your business partner. What attributes do you have, or what do you exhibit, do you think, that allows you to have such success in long-term relationships?
I think a lot of it has to do with my immigrant background and my refugee background. I think I appreciate things a lot. And I never take anything for granted. And so whether it's my wife or my partner, Ron Weiser, who's no question my mentor, those are people that you can never thank enough. And so, I think I have a fiduciary responsibility to my business partner. I have a fiduciary responsibility to my wife. I certainly have a fiduciary responsibility to all of our employees and all of our customers. And so, yeah, I mean, I think commitment is a cornerstone of an immigrant refugee mindset. I mean, that's, it's you're not done until you're done, and you got to do your job. And so it's like my dad did his job, and he got us here, and he got us to a different place in our lives. And so, that's our responsibility to whether it's your partner or whether it's your wife or the next generation. And so, I don't know. I'm just assuming that that's the way it should be. I didn't know there was a choice.
Interesting. Partnership comes up a lot in my sort of small corner of the commercial real estate investing space. And it's something that scares a lot of people. I mean, it scared me, like, what if you screw this up and you hurt your partner in some way financially or otherwise? But I think I love what you just said about kind of being, the word I heard was gratitude, I guess, right? Thankful for, what you have with somebody as opposed to fearful, right?
Oh yeah. And I mean, I'm very thankful for my relationship with Ron, and candidly, we'll talk a little bit more about the great work you're doing. But I mean, at the time which I got into the business, apartment ownership was a very difficult thing to get into, and there weren't many apartment quote unquote owners. And so, and it was a very tough business in terms of raising capital and a lot of different things. And so to have someone like him, bring me into his business, because he had started the business before we got together, and had been very successful before we got together. And then went on to retire and left me with the business, and now we're partners together, and he's retired and has the confidence to do what he does in his retirement. But then I'm able to lead the business in a way that's beneficial for both of us, is I think a testament to our partnership, and I think it's a testament to both him and I, who we have immense amount of trust, and our interests are aligned financially, so that makes it easy. So one does well, so does the other, and vice versa, and so that's important. But I think it's work. I think a business partner is not any different than a wife. I mean, I think it takes a lot of work, and I think it's good you're going to have good times, you're going to have bad times. And so, a real test is, like you said, does it last a long time? And in our case, we've been very lucky.
Yeah, no doubt about it. I'm sure it's more than luck. There's a lot of intention there, it sounds like, but no, luck is, I'm sure, an equation there. With Ron, so you talked about your dad, the lessons from him as a mentor, a lot of them centered around his work ethic, his push, the two things you can't take away, education and work ethic. What's something, when you think of Ron, like a lesson I got from Ron, what is that? What's that one or two like key lessons that jump to mind when you think of him?
Oh, he's very, very persistent, and he's very consistent. So, and he's always focused on a goal. So, I mean, I've always observed his ability to get things done. And so I've always appreciated that about him. So when he sets his mind to it, he's just very consistent. He's very passionate, but he's totally, totally focused. And he will just come back at it. He'll come back at it until he gets it right. And so, he's taught me a lot of things like that. I mean, I think he's also taught me, certainly when I was much younger, he's always been a very good negotiator. And, the way he negotiates is very skillful. It's very articulate. It's very intelligent. And I was able to observe that firsthand because we were working together. And then eventually I was able to accumulate a lot of those lessons in a way that, while I'm a different negotiator than he is, I've understood negotiation in a way that I wouldn't have been able to understand had I not been by his side. And that was very helpful.
Very cool. There's another mentor you mentioned at some point. I heard or read somewhere, a significant mentor, I think, as somebody that I have a ton of respect for, as do most Americans. That's Colin Powell. You have a relationship with him, if I'm not mistaken, or you've had a relationship with him. Same question. Well, first of all, I'd be very curious. How did you meet Colin Powell? That's incredible.
Well,
go ahead.
I can't take credit for it. I have to give Ron, my partner, credit. So Ron was the U.S. ambassador to the Slovak Republic, and he was sworn in right after 9/11. And it was an emergency swearing in process where a variety of ambassadors who hadn't been put out to their responsibilities were all brought in one day and were sworn into office. And Ron was sworn in by Colin Powell. So we got to spend the day with Colin Powell. And of course, Ron ended up working for him for a while because he went off to Bratislava in Slovakia, where he was the ambassador. And so there was a couple of different opportunities throughout that time that he was ambassador that I got to meet him again. But an amazing individual that is absolutely what America is all about. And I can talk about him for hours. He's amazing.
So with Colin Powell, what lessons have you learned from him as a mentor, directly, indirectly? I know you've read a lot of his stuff. Like, what have you learned from him?
Well, I think he is, his actions in battle and off the battlefield, he is such an honorable, ethical, outstanding individual. I mean, he really is 100% person. If you read about him and if you see what he does, he's the real deal. And so, a lot of people say they're honorable and ethical and they do the right thing. This guy lives it. And so his leadership lessons are terrific. And so you can see why, people who are about to die will follow this guy into battle. He's trustworthy. He's a lot of credibility. He tells it the way it is. I mean, oh man, there's just so many endless lessons when you read through his books and just listen to this guy. I mean, what a classy individual. I mean, I just can't speak enough about him. He's terrific.
I'll bet. Yeah, it's an incredible connection to have, and he is, like I said, a true American hero. Somebody that I've admired from afar, obviously for most of, if not all of my life, as long as I've been aware of him, anyway. So, let's you started to talk about this a little bit prior to us starting the recording, but sort of I frame it as like today's entrepreneur, or in the multifamily space, or in the commercial space in general. Like, you had some thoughts on that, like the way things are today, the capital raising, all of that. Can you just kind of espouse some thoughts on today's entrepreneur?
What I think what you are doing and all the various things I see you do is absolutely amazing. And I think your generation of entrepreneurs, what you're doing with what I'm going to describe as the democratization of apartment ownership. And the reason why you're democratizing apartment ownership is, through the internet, through social media, through all the different things you're doing. I mean, the things that you do were unheard of when we were growing up. And so, I see you like talking about raising capital on the internet, talking about raising capital on social media. I mean, that was unheard of. When you were raising money when we were growing up, it was all country club money. It was friends and family. It would take you forever to raise $1. Yeah. And today you do it much more fluidly. You do it through funds. You do it through syndications. It's terrific. And then the same thing with, like finding deals and buying and selling deals. What I love too are your group that you put together, where you have these retreats. And you have, 20, 30, 40 people talking about doing deals and doing deals with each other and getting together. I mean, holy cow, man, that's like groundbreaking. That is unheard of. I mean, when I was, I went to school in the Midwest. I went to school after I graduated from engineering school in Miami. I went to school in Chicago. I went to the school at Northwestern. And so when I graduated, I started my career in the Midwest. Well, there was 5 people in the Midwest that owned all of the apartments in all the Midwest. And so and those people had everything. And so, getting in to be one of those 5 people was like, that was never going to happen. And so breaking into that business was, and you didn't know who had money, banks didn't advertise, insurance companies didn't advertise, none of the people that were raising or providing capital, and syndication was an impossible thing to do. And so the fact that you can do it so freely, you can do it so effortlessly. I know it's not effortlessly, but I mean, I just see it seamlessly. It's probably a better word to use. I think it's absolutely marvelous. But I really love this whole thing that you have this partnership of people you bring together to talk about how to get better with each other and how all of you can propel each other to move forward. So not only are you guys talking about deals and raising money, but you're also talking about improving each other, which I think is terrific. So I see this whole thing. I mean, I'm an old guy. So I look back and I'm saying, holy cow, man, I wish I was growing up today, because this is such a cool time. I think it's marvelous. I compliment you because I think your style is absolutely great, because you're very motivational. And but I also think it's important, because I know your story. I mean, you took some big gambles, you quit a successful career and you flipped over to become an entrepreneur. So, I mean, you're walking the walk. You're just like kind of one of these people that talks about it and doesn't do it. You're doing it, which is great. But this is a very unique time in the multifamily ownership business. I've never seen anything like it. I think it's absolutely spectacular. And I compliment you, because I think you're one of the main leaders in this group. And I love everything you're doing. But I really think everybody, I mean, the people around you probably don't realize how unique a time you guys are living. So, I mean, just go for it. It's fabulous.
Thank you. First of all, it's very kind of you to say, and you answered a question that I was going to ask, which is, well, what advice would you give to today's entrepreneur? And it sounds like that's it. Dive in, go for it, leverage everything that we have right now. Because you're right, social media is very easy. You can get lost on it. It can be a trap, or you can leverage it, just like anything. And leveraging it, I think, could be a very powerful tool. Wouldn't you agree?
Yeah, and I also agree that if you're getting in at some very young ages, like all of you are getting in. So here's the thing, a lot of people think this is a quick money business. It really isn't. And I always say to people, look, it's not a microwave, it's a slow bake. And so what you got to say, at least for me, you're not going to create generational wealth until it's 10, 20, and 30 years down the road. I mean, if I was honest, my partner and I really made our money in the last 5 to 10 years, which is a pretty shocking thing to do, because the first 10, 20, and 30 years, you're digging in, you're reinvesting your capital, you're borrowing more money to get back in and doing more deals. And you're constantly going into debt, candidly, to continue to grow your business. And taking some risks. And so, and then boom, the light breaks and all of a sudden you're out of debt and things are different. But that's a long way down the road. And so, for individual assets to mature to the place they are truly generational and they are truly providing cash flow in a way that is unique, isn't a 0 to 5 year thing. And the real wealth in our business doesn't come by buying and flipping and making a profit. The real wealth in our business comes from holding that apartment project 5, 10, 15, 20. When you get to 30 years, things change radically. And so if you can start at your age and look down the road to what it's going to look like 10, 15, 20 years down the road, once you refinance that building once, twice, 3 times, and you pull that cash out, or once you continue to bring the cash flow in, whatever the case may be, I mean, it's transformational. But that's how you create long-term wealth in our business, is by holding quality assets for the long term, because they only get better with time. I mean, my view is that rents essentially double every 10 to 12 years. And so imagine the portfolio value that you own doubling every 10 to 12 years. And that's very realistic. I mean, you can do your own math, but I mean, take a look at it. It's not unrealistic. And if you look at a time like now, where we're going into this hyperinflation in rents, and, and if you look at the supply demand imbalance across the country, it's in favor of the apartment owner. So for anything that you own today, it will be not arithmetic or geometric. It'll be exponential growth in terms of its cumulative value. So I think the fact that you're doing it now, you're doing it so young, and you're doing it in a big way is great, because even if you fail a little bit along the way, it doesn't matter. Time will heal those mistakes, and owning assets for a very long term is the secret to creating generational wealth.
I can't thank you enough for saying a lot of that, because I know for me, I get impatient, right? You see, and that's probably the downside of social media, right? You see all these people doing amazing things. I mean, even yourself, I mean, you're in stratospheric levels with what you built with McKinley, but still you see people doing these things. You're like, man, yeah, am I moving fast enough or whatever? But to your point, I love what you said. It's not a microwave, it's a slow bake oven. That's a great line. It's quotable, tweetable even. So yeah, I appreciate you saying that, because it means a lot to me to hear. I needed to hear that personally. But with you specifically now with McKinley, like before we started recording, I kind of ran through your bio and we made some modifications on it, right? Like at one point, McKinley was 35,000 units. It was 5 billion in assets under management. There was 10 million square feet of office space and retail. But you've sort of gotten out of some of that. Can you talk to me a little bit about your strategy now, given all that's happening? Like, why get smaller at the moment? What is a guy at your level doing something with a company the size of McKinley? Like, what is that repositioning strategy looking like, and why?
Yeah, we're not getting smaller. What we're doing is we're setting up our business for the generational long term. And so what McKinley looked like, let's say 10 years ago, where we were retail, office, and multifamily, and we were in multifamily in many markets across the country. It looked like a business of a couple of entrepreneurs who, maybe had taken a couple of organizational risks along the way, and we're probably spread a little bit too thin on the geographic dispersion and the span of control. And that wasn't a business that we could lead to a next generation. And so that didn't make a lot of sense. And then the other part of it was, for me at least, I took a cold, hard look at retail. I saw that coming and I got very nervous, and I said, let's get out. And we got out of it very early. So we got out actually quite well before values deteriorated. And then I had the same feeling about office. And, at the end of the day, we were apartment guys. Ron and I are apartment guys. We're not office guys. We're not retail guys. We got into those businesses because we thought we could make money doing them, but fundamentally we're apartment guys. And then we knew really 3 markets quite well. Metropolitan Ann Arbor, the Ann Arbor region. Ron's from St. Joe, Michigan, and he went to school at the University of Michigan. And I know Florida very well, and Orlando and Tampa are our core markets here. So we just looked at it and said, let's go to where we know what we do best. we're the largest apartment owner in metropolitan Orlando. It's a huge market to be the largest owner in. We got assets, significant nature in Tampa, and we have huge holdings in metropolitan Ann Arbor. And, we don't need to go a lot of places. We market dominate those markets. We have a disproportionate market control in the sub-markets that we're in all those markets. Why be in other markets across the country where we don't have the same buying power, organizational power, pricing power on rents, all the above? It just didn't make sense. So, we sold off at times in the last 3, 4, 5 years, at times where people, in my opinion, probably overpaid us for properties in places I wasn't interested in owning long term. So we consolidated that and made sense for us long term. So getting out of retail made sense. Getting out of office made sense. Selling those apartment assets at a peak price, what I consider to be non-peak assets, and necessarily not great markets that I didn't have long-term faith in. So now we have an amazingly strong portfolio where we have all of the people that are with us every single day have been in those markets. Our people have been there 10, 20, and 30 years. So they know those markets well. And so, we're gonna out hustle people. Our financing and our capitalization is uniquely different. There's, we went from a leveraged business at young age to an unleveraged business at an older age. So all the different things that you need to have to be, more powerful in a market, we've got now. And so, but for us, it was strategic. It didn't make sense to be in the retail business. It didn't make sense for us to be in the office business. It didn't make sense for us to be in 8 or 9 markets when we really needed to be in 3. And so all of those things is what we've been working on, and we've been fortunate. And then so, we refinanced our entire portfolio for the long term. And so we've done all the right things. It's a generational business. It's a business that works well. We have to get up every single morning and work hard every day, but it's a logical business. The span of control makes a lot of sense. The geographic dispersion makes a lot of sense. We invest enormously in our assets. So all of our assets are positioned for the long term. This is a business you can't replace. And so, even when we're dead and gone, no one's going to want to touch this thing. It's just too valuable. What do you do with the money? Where else would you put it?
That's a fair question. And the other part, so 2015, 16, I'm sure, I think I've heard you kind of like, something's going to come here. I could see something coming, put money on the sidelines. 2018, nothing came, still compressed cap rates. All right, and then here we are in 2021. How long, I mean, I know you don't have a crystal ball, but like, how long does this run? Like, what is the possibility? Is the supply demand dynamic enough for this to have a tail, meaning the uptick in value, the up and to the right sort of trajectory of multifamily? Or do you still see, I think COVID, we assumed, would have done it, right? Like that was going to be kind of the beginning of a downturn. At least I did, but you obviously know much more than I do, given your experience with past downturns. Like, what's the trajectory of multifamily over the next 2, 3, 5 years if you had a crystal ball?
I think that the supply demand imbalance is the differentiating factor this time around. So I don't know. You see, so if you look at all the apartment, let's just talk about workforce housing, which is what I do for a living. So if you look at all the apartments that are quote unquote characterized as workforce housing, and you look at across our portfolio, let's say the rents are $1,100 to $1,200 a month. And so, those buildings were built between 1960 and 1990. Every time you go out and buy a B or C garden apartment, it's going to be that 60s, 70s, 80s, and 90s vintage product. After that, anything that's been built recently is, certainly in the last 10 years is, as Class A or AAA or Super A's, as I call them. And, those things are $2,000 a month and more. And that's just to cover the debt service at a break even, forget about making any money. So, you can't go back and reproduce workforce housing. It was a period in time where we built a lot of housing. And so that's a period that's not coming back. And then the other problem you got is, you got this 5.5 million overhang of single family homes that we didn't build over the last decade. And you've got all these institutional investors that are buying homes. So people that are typically people that would have moved out of my places and moved in and to buy a house, they're now crowded out because, all these Wall Street guys are coming in and buying single family homes. It used to be, there was 1 in 6 was an investor. Well, I think in a place like Miami or Orlando, it's like 1 in 3 are being bought by investors. So, the combination of the single family opportunities going away for that renter and the number of choices where they can rent at $1,100 a month going away, I've never seen a supply demand imbalance in my entire life. I started the business in 1979, so it's been a while. I mean, too long, but it's a unique situation that I don't know where we go from here, because I think there's political risk, right? I mean, there's a lot of people that are, worried about things like rent control and things like that come about when, there's just so much upward pressure in rent and there's no new supply coming in to satisfy that need. So it's not just affordable housing. It's really that tier above that, which is what I do for a living, which is workforce housing. So, at least in the markets that we're in, you really can't expect to bring in new supply at the rents that we're providing people homes at. And so it's a very unique opportunity for us because, it's certainly an important opportunity from a profitability side. But I don't. So to answer your question, in the space that I see you investing in, which is what I'll call B and C Garden Apartments, yeah. I see a long run.
Yeah. Well, I hope you're right. I hope you're right. Cause yeah, I mean, I do too. And it's hard to project the downturn, but man, having you on this call, of course, I need to ask that question. So I appreciate being so open and honest about it. Again, I know who knows, right? Nobody saw COVID coming. Nobody saw a lot of things coming, but that's a logical point. The supply demand imbalance specific to workforce housing in these markets. Yeah. You can't build more. There's no product for those folks to go to. So that makes a lot of sense to me. With your experience, I do kind of want to run through, if you don't mind, I'm going to give you 3 different years. And I'm just kind of curious your reaction to those years, given the experience. Like what comes up when you hear these years for you professionally, personally? So let's start with 1982.
Well, 82, I was still in the banking business. I was just getting out of the banking business and going into the development business for the very first time. Interest rates were 21%. And it was a scary time. And so, it was a very different time. And so, there was no capital. The disintermediation of capital was real at that time. And so, I don't know. It was fun for me because I was a young kid and I was learning a lot. And it didn't matter what kind of mistakes I made, but it was a very strange time in the history of apartments. Let's call it that. And then, of course, what came after that was this, massive ballooning of the early parts of the syndication business and people building a whole lot of the product that I call today workforce housing. Because if you look at all that product that was built like 82 and 89, 82 before the crash, 1991, that was sort of the renaissance of development and people were doing tax syndications. You give 3-to-1 write-offs, 4-to-1 write-offs, 5-to-1 write-offs. It was a fun time.
So 1991 was the second date I was going to ask you about. I think that was, you were fully in the apartment industry at that point. What was that year like for you? Because there was a massive downturn that year.
Yeah, Stay Alive to 95 was Sam Zell's famous speech, right? I mean, that's really what it was all about. I mean, so yeah, Stay Alive to 95. That's what 91 was all about. And it was, that's all we did was we just hung on. I mean, we were dead and gone and bankrupt, and we just hung on. And so Sam's saying, my partner and Sam went to school together. There was a big lecture at the University of Michigan Business School where Ron and Sam spoke, and that's where that famous saying came from. Sam saying "Stay alive to 95," and the answer is he was right. And that was before he got into the REIT business and just at the very start of the REIT business, and he was beginning to capitalize via REITs. It didn't really exist before then, and so raising capital was different, and nobody had any capital for that matter. So staying alive to 95 was important.
Wow, yeah, no, that makes sense. Now fast forward to 2008. What was that year like at that point for you, or 2009?
Yeah, 8 and 9 was good. I mean, so we took some stupid risks because we had more capital then, and so we knew that we had to go for it. And so we bought, we bought a lot of buildings, and we probably bought $1 billion in buildings in a very short period of time. So, wow. And not all intelligently, and a little bit, over the edge. But as it turns out, over the next 10 years, it's more than paid off. But I felt like since we weren't able to do that in 91 as much as we'd like to, that we went for it, and so it paid off.
I'm sorry.
No, I was going to say we took educated risks. We thought we had everything figured out, and we obviously like anything in business you don't, but we've come out the other side quite spectacularly, and we're pleased for that.
So what advice would you give to somebody like me or somebody that has, 200, 300, 400 units of like you said, garden style, Class B, Class C apartments going into this, what seems like maybe a longer tail on rent increases, value increases, based on your experience in those 3 prior downturns? And it sounds like by 08, you kind of you knew what to do and you bought a bunch. And like you said, over time, real estate has a tendency to forgive you. So even if you made some risky moves, if you will, it was good in the long run. What
Yeah.
advice do you give to the investor today in preparation for, I mean, there's going to be another downturn at some point, I would guess. So what advice do you like? How does somebody prepare themselves, or do they right now? Is it just buy what you can? I'm kind of curious what advice you would give me or anybody in that space.
Well, I mean, the best way you can prepare for a downturn, a recession, is capitalization. So to the extent that you can not over leverage your asset, you'll have that cushion that you don't have as opposed to having a levered asset. So, one of the things that we're doing now in our current life, which is obviously we have the capital capacity to do it, is we're putting an enormous amount of capital upfront, and which we never did before when we were growing up. And so that's that buffer that is a logical. Funds do it all the time. Private equity does it all the time. They put in 40% equity and 60% debt. We never were able to do that because we were growing up and we always only tried to grow with our own money. We always made it a point of not bringing in other people's money after we left the syndication business, because we wanted to have control. And so we purposely never went out and raised capital. Even that constrained our ability to grow, but it gave us complete control of our business, which at the end result was certainly worth it. But I would say, capitalization can cure a lot of problems in a recession. And so, if you're at a 90% leverage rate, it's a lot different than you're at 60.
What do you target a specific percentage, or do you recommend a specific percentage? That might be an overly literal question, but is 80 or 70 or 75 kind of a benchmark that you use, or just curious?
Well, the numbers for us are gotten up the older we've gotten, but so I guess more conservative in time. But to me today, and the deals that we're doing today are probably mostly 70-30.
Gotcha. That makes sense. Yeah, that seems very like you said, very safe and from a leverage perspective. So that makes sense.
And if we need to put more money, we got it there. So we're ready either way. But I think the answer to your question is I would be looking to where the markets and you understand the rents and you understand the operations. And for me, by the way, I should make a point. I mean, we've always been an owner operator. So I don't, I've never been in the business of letting somebody else third party manage our assets. It's just that wouldn't be acceptable to us. We're obsessive compulsive. We are maniacal operators. So it wouldn't work with us in our mental profile. So, that gets back to the whole geographic dispersion and span of control thing I talked to you about earlier, which is why we're now back to 3 markets, because we know those markets so well, and we can massively control what goes on in those markets. But anyways, I mean, for me, if you know your stuff, if you know your markets and you've got the capital with you and your partners to do it, I would buy assets right now. I know everybody says it's a bad time to buy assets, but I mean, I think if you do it prudently, well capitalized, trying to time the entry point to have an expectation there's going to be this massive downturn, you're going to be able to buy a whole lot of stuff, man, you better be good and know what you're doing.
You're the second. You met David Osborne. I don't know if you recall the conversation with him. I had introduced the two of you to one another. He's a gentleman that's done very well for himself in the real estate space as well, and his advice is very similar. So when you hear it from 2 smart guys who have the experience, who have the size of portfolio that you do, and all the backing behind you, then it makes sense. Buy assets. That's the advice for everybody. Buy assets. It makes perfect sense to me, especially in an inflationary environment. What's keeping you up right now at night?
I'll never sell them, by the way. Buy them and
never sell them. Yeah. You said that I'm a buyer, not a seller of real estate, right? That's kind of your mantra. Buy, but don't sell. Yeah.
Yep. That's us.
Beautiful. What's keeping you up at night right now, if anything, personally, professionally, for that matter?
I got a new dog during COVID, and he's a cute little guy. He's so adorable. So he keeps me up at night, but it's a good keep me up at night.
Yeah, no doubt. What advice, if you could go back to 25, what advice would you give your 25-year-old self at this point with what you know now?
I wouldn't do anything different. I do everything exactly the same. And I'd marry the same woman at 25 that I married at 25. So I can't go wrong with that.
Not at all. If you were 90, looking back at now, what's your 90-year-old self going to tell you today? What advice is he going to give you?
A young kid didn't know what he was talking about. And every time I look back along the way, that's probably what I can say about myself. But here we go. You just keep on going.
That's amazing. Any books that you recommend? Any book that you're reading right now that you could speak to? Just anything that you're getting educated on that you could share?
We talked earlier about the Colin Bowell books. Grab all of them. Read all of them. They're fabulous.
Makes sense. Yeah, that's a good person to listen to. So with GoBundance, we have this saying, like we're all aspiring to grab life big. In closing, I'm just kind of curious if you can recall whatever it is, a possession, an item that you purchased, a moment, a memory, whatever it may be, the first time you recall that you maybe just grabbed life big. What would that be?
I'm not there yet, so I don't know.
Still going.
Well, I mean, I think that's, I mean, I talked to my wife about this a whole lot. I think it gets back to the immigrant mentality. And I talked to my partner about this a whole lot. We haven't made it, man. We're not done until we go, until we got a lot, we got a lot of work ahead of us. I mean, I guess, I don't know. I don't feel like I'm there yet. I mean, I got to get up tomorrow morning and work hard because I mean, I don't take anything for granted. I give it my absolute best every single day, regardless. So I have not arrived and I don't expect to arrive.
That's a great answer. I'm just kind of curious as a aside to that. So what's your relationship with comfort and discomfort? Do you intentionally try to get yourself out of your comfort zone? Or I'm kind of curious what your take is on that.
I don't try to get myself out of my comfort zone. I mean, I think it gets back to being an immigrant. I mean, any day you can be, your life can change. And so you got to be ready. And so I don't know. I don't believe in this whole I've arrived thing. I'm not there. That's not who I am.
I like to say you're growing or you're dying, right? So you're in growth mode always.
I'm appreciative as all get out and I don't take anything for granted.
Makes sense. Albert, if somebody wanted to learn more about you, McKinley, what's the best place that you would direct them at this point?
Yeah, they can go to our webpage, McKinley.com or www.mckinley.com. Love to have anybody go on there and take a look at what we do. And we're proud of it. And it's our life's work. So, we're very proud of what we've done.
Yeah. Well, I'm blown away at the fact that I have you here. It's been an absolute coup for me. So I really appreciate you taking the time. It's major contribution on your part to just sort of impart your wisdom on me and on all of the listeners of this podcast. So just emphatically, I want to say thank you for being here, and I appreciate you taking the time today.
I appreciate you. It's been wonderful. Thank you so much.
Thank you. Thanks for watching. I hope you enjoyed this episode. Let us know down in the comments and make sure you hit that subscribe button. Hit that notification bell so you can be informed on the next episode and other content right here on this channel. Thank you.